Afternoon, everyone. This is Coffee and Charts, Volume 61. So this looks like this is going to be the last observation that I'll be able to do until next week because the market closes at 4 o'clock today. So we got about another hour and a half or so to observe. So I figured I'd just come on and observe along with you guys. I've been actually looking at the market since this morning. Not really that much going on. Not that much going on at all. And looking at the market right now, still don't see that much going on. I'm kind of just seeing a gray area for the most part. Right now, with what the market is doing, it looks like it's starting to range again. But overall, gray area throughout the day. Excuse me. So depending on which perspective you're observing from, whether it's horizontal or vertical, that will determine what you end up seeing. Of course, you should only be looking at one. So whichever one it is, that's what you should be looking at. For vertical perspective today, I would say that I have not seen that much at all. There were maybe one or two instances where there was a potential boost of momentum, but nothing that lasted for a period of time that really could, produce any opportunity as far as trades go. So, for momentum, nothing much going on. And as far as horizontal goes, similar situation. I've seen times where the market has slowed down and started to range, but then, you're seeing bigger to mid-sized candles and just nothing consistent from what I've been observing today. And again, I haven't been observing all day. Like I observed this morning, then I took a break, and then I just got back on maybe about 10, 15 minutes ago before I came on here. But yeah, not too much to speak of. And that's cool. We're going into the close for the holiday weekend. And you know, kind of just reset things and then start fresh come next week. So, and there's a lot of content, that you can watch because I did an observation every day this week. Of course, we got the 301 playlist. I may recommend some trainings in the main playlist as well over the weekend. But I mean, it's content galore. Like there's so much that's just there that you can watch in order to continue to elevate and to grow, over the weekend while you're enjoying the festivities. Because that's what I have a tendency to do, even when, like it's holidays or whatever. I still watch videos. I can't help it. I watch videos, I train, it's just an non-stop thing. So, I'm used to it and it is what it is. Like this is there's never going to be a time where I don't do it. So regardless of what's going on, I don't care what's happening. I don't care what holiday it is. I'm going to be training. Period. Yeah, so as you guys make your way on, be sure to like and share the video. If you're tuned in from Facebook, make sure that you follow the TeamAlliance page. Turn on the little bell. If you're tuning in from YouTube, make sure that you like and share the video. Subscribe to the channel and turn on the bell notifications. And if you're tuning in from Twitter, be sure to like and share and then to retweet on your timeline and also make sure that you're following us on Twitter. All right. So I think it's TeamAlliance now, if I'm not mistaken. All right, so yeah, so we're streaming live on all three of those platforms right now, and we'll just observe until this market closes in about another hour, 15 minutes. At which time I'll be making another Starbucks run. Yes, indeed. So I'll have my coffee after charts. I don't have no coffee right now with the charts, but it's all good. All right, so yeah, so we had another great live stream last night. The market observation was very, very good yesterday. And so was the one before, the night before last night. Yeah, these market observations have been very good. The lives have been very powerful. Yesterday I was talking a little bit about the comparison again between NADEX and Forex. And I think that, I'm not really trying to like beat it to death, but I think that people just need to be more aware of NADEX as a platform, in general, and to not just limit themselves to the Forex environment because don't get me wrong, Forex is great. But NADEX has come along now, and these derivatives that we are able to trade here, it's just it can't even be compared, like at all. Just can't be compared. Oh, excuse me. Oh, sorry about that. Oscar, we're looking at the Euro USD. That's the Euro USD, and this platform is the NADEX platform. So this is not a traditional Forex platform. NADEX is a platform where you can trade derivatives based on Forex markets. So the market that I'm observing here is the Euro USD, and the platform that you're looking at is NADEX. And what these are that we're able to trade here are binary options. So, binary options are very simple on NADEX. And the binary options that you can trade on NADEX are not like the traditional binary options that you guys are used to with these overseas platforms. They are not the same thing. The NADEX binary options are a regulated instrument. They are regulated by two regulatory bodies here in the United States, the NFA and the CFTC. And these agencies regulate financial institutions that offer derivatives. So NADEX offers these derivative instruments, and these agencies regulate NADEX to ensure that NADEX does good business practices. So, in other words, they're handling the money the right way as they should. They're not trying to cheat customers. They regulate them to make sure that they're doing what they're supposed to be doing as far as what services they provide. And that's important. I don't know if that's important to other people, but that's important to me. So I like, being able to trade on a platform where I don't have to worry about stuff. I don't got to worry about if I'm going to be able to withdraw my money when I make profits. I don't got to worry about any of that type of stuff. I know that when I make money, the money's going to be there. When I make a withdrawal, that money hits my bank account 2 days, 2 business days. My money's in the account. So by the third morning, the money's in there. I don't have to wonder if it's going to be in there. So we don't have certain issues and worries and concerns that I know a lot of other people have to deal with when they deal with these overseas brokers that are not regulated. So, just something else to add to the awesomeness of NADEX. David says the breakdown yesterday explaining the difference between foreign exchange and NADEX gave us the difference of how we can scale up in a small number of trades versus Forex. You have to use margin. Yes, exactly. Exactly. And a lot of people don't realize, that, well, first of all, people don't even know that NADEX even exists. So that's one of the things that I know that this content does, is it helps to bring awareness to this platform. That's number one. Number two, people don't understand how, the platform actually works as far as the instruments go. And when I have opportunities to break it down, like I did, in the live stream yesterday and the day before, when I get chances like that to break it down, I definitely take them, because I realize that people just don't understand, one, that there's a significant difference. It's not just like, oh, well, NADEX is binaries and binaries are more risky than Forex. That's not true. Like, I need to be able to dispel certain things that are not true. That's not true. If you actually want to consider which one is more risky, if you think about margin in a Forex account, that's way more risky than you depositing money on an exchange. Whoa. Think about that. See, on an exchange, what happens is whatever money you have at risk on the trade, that's it. That's it. It's using the money you have in your account. When you trade on margin, they can margin call you if your trades exceed the value of the margin available in your account. So you can actually end up losing more than you had in the account. If the market was to run and you're in a trade and it goes against you and you don't close it out, what they automatically do, they have mechanisms to make sure that they close you out, so that you don't just keep the trade on running and start running into the negative. They're going to make sure that you don't do that. So they have these margin requirements. And when they do a margin call, they just close their positions. They don't ask you anything. Market goes against you for too long, they're closing out your positions, and and that's it. So you got to eat whatever the loss is. That's a big difference right there. Just thinking about the margin versus the actual fact that you don't deal with margin on NADEX, it ain't even close, man. It ain't even close. And like I said, yesterday I was talking about Forex and how I come from Forex. When I left my job in 2006, I left to trade Forex full time. At that time, I didn't know anything about NADEX. I'm not even sure if they existed yet. I don't even remember. But that was like in 2006. So, like I said, it's not that I don't like Forex or I have something against it, but I do understand what the difference is between being in a Forex account and then what we have available to us on NADEX. It's not close. It's not close at all. And then when we talk about being able to scale up, you can't scale up in any other type of account like you can here. You just can't do it. You cannot do it. These are $100 contracts. So basically every $100 that your account goes up by, you can add another contract to trade. You know how crazy that is? It means you can just keep increasing the size of your trades, but the trade is the same. It's not like by you increasing the size, it alters or it changes the dynamic of the trade that you're in. Nothing changes. So it doesn't matter what your contract size is when you're in the trade. The outcome will be the same regardless of what contract size that you used. That's powerful, man. That's powerful, because what it means is that as you begin to understand the market and, use the information from the market to win your trades, because you'll be able to be in trades at the right time once you learn how to understand movement in the market. That's how you do it. It's like when you're in a trade, it's really not about the trade. It's about what's the market going to do while you're in a trade. That's the question. So before you even take another trade, think about that. What is the market going to do while you are in the trade? That's the question that you need to answer first. And if you ask and answer that question first, that will position you to be constantly working on what you should be, which is understanding the market, you see, versus trades. Most people focus their attention on trades. Oh, I need some good trades. I need a better trade setup. I want to trade out the money now. Out the money is better risk reward. No, I'm going to try at the money. Well, I'm going to try in the money because I probably will win on my trades if I trade in the money. There's no guarantee that you'll win anything by trading anyway. There's no guarantee. The only way to position yourself to have the best opportunity to win is by familiarizing yourself with how the market moves. That's the only way. If you take the time to do that, you'll now be in position where you can look at the market and know whether or not it's a good time to be in a trade. Do you see the difference? There's a difference between those two. There's a difference between picking a good trade and knowing whether or not it's a good time to be in a trade at all. You see? So if you work on that first, before you start concerning yourself with trades all the time, what you're doing is you're actually aligning yourself with the market, and you have a much better probability of winning if you're in alignment with what the market is doing at the time. Does that make sense? I mean, just think about it logically. If the market determines whether you win or lose based on how it moves, then you being more in alignment with the movement will improve the chances of you winning your trade when you take it. Yes? See? It just makes sense. It just makes more sense. So when you take the time to observe the market, you put yourself in that position where now you can align yourself with the movement of the market first. So you're able to look at how the market's moving and start making sense out of the movement. You see how that goes? See, you start making sense out of how it's moving. Now, as you start to make sense out of the movement, when you decide to trade, you can align your trade with the movement instead of just picking a trade that looked good at the time because of how the trade set up. See? See how that goes? So it's just a whole nother dynamic when you actually take the time to start studying the market. And this is what I tell everybody. I don't care what you trade. I don't care what platform you're on. I don't care what your instrument is that you like to trade. You could be in the stock market. You know, you could be trading on Robinhood. You can be trading derivatives. You can be trading futures. You can be trading crypto. Whatever you're trading, you need to take time to start looking at how the market is moving so that you start to understand how to use that information for your trades. See, if you don't take the time to do that, you'll either win or lose trades and you don't understand why. That's my point. So even if you buy some type of strategy or you subscribe to some type of signal service, you're worrying about results, but you don't even know why you're getting the results that you get. Does that make sense? It's just like if let's say you subscribe to a signal service right now, and they're like, listen, for the months of October, November, December, we got 100% wins on all of our signals, and you're like, yeah, that's the one. I'm going with them, and you subscribe. And let's say that when you subscribe, you win the trades. You take the signals and you win trades, right? And then a day comes and you take the signal and then the trade loses. And you're like, damn, man, they were winning for 3 months, 4 months. and I just lost. Problem is, you don't even know why you lost. The same way you didn't know why the trades were winning either. Wow. Think about that. So if you don't know why, you are in the dark. You're totally in the dark. You don't know what's going on. You don't know why you're winning. You don't know why you're losing. And if you don't know why, how can you fix what's broken? How can you fix it? You don't know why. See? So you're literally just relying on coin flips and hope in a market where you're rewarded for actually having knowledge and skill. You see, you don't get rewarded in the market for having hope. You don't get rewarded for having hope. You get rewarded for having skill. Market skill. So this is why I tell you guys to develop your market skills first. Stop worrying about trades. You're too focused on trades and strategies and win rates and percentages and probabilities and strategies and signals, and you're preoccupied with all of this stuff when you're much better off by giving more value to the time that you spend just being in the market in general by learning the market. You're much better. It's a much more valuable, it's a better investment for you to actually spend your time learning about how the market moves. Just look at it. Just look at it. Don't try to figure anything out. Just sit down and observe. Just watch it. And you start to learn about why it's moving the way that it is. You start recognizing how it moves. Like, wait, I noticed that it did this and it moved like this. Oh, okay. I see what happened when it has this type of behavior here. That's when those pops come. Right? You know how some people have been in trades and it just moved suddenly out of nowhere? And they're like, yeah, the market just moved out of nowhere. It was moving slow, then it just popped. Yeah, because that's behavior present. And if you study long enough, you'll begin to understand why that happened. And if you know why it happened, then you can basically avoid it altogether. You know not to be in a trade when the potential for that to take place is there. So you're never going to be in a trade during that type of activity. You see where I'm going? You see? Because you understand why. So just taking the time, man, to learn and to study the market, it puts you in a whole nother category altogether, you know, outside of the sheeple. Because that's what people are, you know, nowadays. Everybody that's trading on these platforms, for the most part, they don't know what they're doing. They don't know why they're winning. They don't know why they're losing. And it just all sounds the same after a while. It's like everybody's talking about win rate, strategies, signal services, indicators, right? They're all talking about this. Telegram groups, copy and paste. Oh, here, copy and paste these signals, y'all. These signals are 80% accurate. Copy and paste. Set it and forget it. What? What am I setting and forgetting about? I don't even know what this is. See? So people see what it is that in the industry overall, what has happened is the markets have, like, people have attempted to turn the markets into passive income. It's not possible. You don't earn passive income in the market in trading. You can earn passively. Your accounts can grow without you doing anything by investing in the markets long term. Yes. And that's how you invest in the stock market over the long term. Why? Because historically, the stock market always goes up. It always grows because the stock market is embedded in the economy, and the economy inevitably is going to grow because they always print money. Money has to go somewhere. So where's it going to go? It's going to go somewhere into the economy. And ultimately, it's going to make its way into the stock market, and the stock market goes up over time. That's why your 401k grows, over 5, 10, 15, 20 years, because the stock markets go up. But that's how you invest passively. But we're not talking about that. I'm talking about trading. See, when you try to come into trading, you can't turn trading into passive income. Like rewind that. Can't turn it into passive income. It ain't nothing passive about it. You got to actively understand what you're looking at. You got to actively understand why you're trading. And you have to align your trade with your understanding of how the market moves. Why? Because that's what you need to win. That's how you win your trades. That's why. You see? So all of these things that people, have been doing for a while now, people are starting to wake up. They're beginning to realize, like, yo, I see that this is you really got to actually have skill with this. Exactly. Which is what I've been telling folks the whole time. I remember when I first started making videos, and I used to be talking about skill in the videos, and people used to be telling me I'm talking too much. Oh, you're doing too much talking in the videos. Just show how you're doing the trades. I'm like, I am showing how I'm doing the trades. That's what I'm talking about. But they don't understand that. So when they hear me talk about behavior and environment, and I'm saying all of this in the video, they don't want to hear that. They just want to hear, all right, well, we're gonna sell this right here. We're gonna buy this right here. That's what they want to hear. Signals. See? They don't care about understanding why I'm saying it. But that's what your problem is. Because you cannot do that indefinitely. Here, look at this for horizontal. See what this looks like. This 04, 304 candle right here. All right, let me see something. 6, 7. Yeah, it looks like it's moving a little bit back and forth. But there is a barrier here. 8, 7, 7, 7. Yeah, there's a barrier here with a buffer. This is gonna be RCB. This is gonna hold because of how the market is positioned and the fact that the market's in a range, all that good stuff. So that's gonna stay in the box. That represents RCB. I would use it as an MRMH. I would use it. So I would use this as an MRMH, what we just saw just now. But that's definitely RCB. Definitely RCB. I've said many times when I look at, like a potential trade that's setting up, I'm not looking at the trade first. I'm looking at the market first. When I look at the market first, the market is letting me know whether or not the trade even makes sense to consider at all. Once the market tells me that it's cool, then I understand that it's not that big of a deal about the trade. Not as big of a deal as you would think that it is. So sometimes what people will do is, they're looking at the trade and they're like, oh, that trade was no good. But I don't want you to dismiss how the market looked. Even if the trade didn't set up and it was disqualified, or whatever, that's cool. Even if it was disqualified, do not dismiss how the market was. I want you to look at what's right about the market, what's right about the time. Just look at it. Like just now, when we saw this just now, I could see it. You can see it. There's a barrier. You got a buffer between the candles and the strike. It's set up just now, and I was already saying that it was RCB even before the binary finished because it was RCB. So RCB is the prerequisite to actually being in a trade. So now what happens is if you see another setup take place, you know that the environment and behavior right now present in the market is what we're waiting to see. You see what I'm saying? So you just wait until the market is looking right and until it's positioned properly. Once that takes place, then more than likely you'll have a trade that sets up. And once you do have a trade that sets up, you already know that the behavior that you're looking for is present. See? And that's what I'm saying about understanding market movement. When you already know that, that's what's actually giving you confidence and what's giving you permission to be in the trade. So you see how it's not like I'm sitting here looking for a trade. All I did was look at the market just now, and I saw how the market was behaving. And lo and behold, what happened? RCB. So you see, and again, it's not like I was looking for it. I'm sitting here talking. I'm talking about something else. It ain't got nothing to do with the market right now. Whatever I was even talking about just now. So yeah, man. Yep. Yes, it was. Yes, it was. I mean, they all are so good. It's crazy. Yeah, they all, especially these recent ones. Hey, you never know. You never know. Yeah, I won't be surprised. I will not be surprised. In stocks and foreign exchange. Excuse me. Oh man, sorry about that. In stocks and foreign exchange, the market literally has to go to a certain point for you to even match the type of money that we make on a trade with the skill that we possess. That's a fact. That's a fact. And that's what I was discussing in the lives, the past two lives, the one yesterday and the one the day before. More specifically, the one day before, I went into more detail about it. But yeah, I mean, that's all facts right there. That is all facts. Yep. He says the skill we have when all the elements line up, all we need 30 seconds. Most traders are in trades all day, sometimes all week, but really all we need is 30 seconds. Yeah, less than a minute. Yep. And that's really all it takes. That is all it takes. I remember when I first, started talking about the last minute of the binary and why it's so important. And a lot of people got a light bulb moment because of the way that I broke that down. I'm like, you realize that you got a 5-minute binary, but the actual decision is made in the last minute. So just think about that. What's the most important minute or the most important time in the entire 5-minute binary? The most important is the last minute, because whatever the market decides to do in that last minute will determine the outcome of whatever your trade is. It determines the outcome of that binary. So that binary is either going to end above the strike or below the strike. And whatever it decides to do in that last minute determines the outcome of it. See? So the fact that it's that important, understanding the behavior and the environment that leads up to the last minute, is helping you to see what the outcome of the movement in the last minute is going to be. You see, like, do you understand what I'm saying? That the movement in the last minute, for the most part, aligns itself with the behavior that leads up to it. The market does what it's doing already. You see, it does what it's already doing. So when you understand that, you start to understand why it will do certain things after a period of time. You'll start to understand, well, why does it move like this? When you've had this for a while. That's how I explain position change. People would think, the market is transitioning into speed. No, it's not. All it's doing is shifting the position that it's in to somewhere else. And if it's a large enough move, it can reposition itself into another box. So in other words, it can relocate either above or below the existing relevant strike where the market was already. And all it was a reposition. And after that, it continues to do what it was already doing, which is range. Look at how powerful that is. See? So when I start explaining all of these things that I understand, and then you start to observe the market for yourself and you watch and you start seeing it for yourself, that's how stuff starts clicking. You see? And that's why this content is so important, because it's teaching you how to look at the market. It's not like I'm showing you what to look at. See, what to look at is a trade. That's what most people want to know. Oh, well, what am I looking for? What's the setup? When do I take the trade? That's how most people think when it comes to this. But I'm actually teaching you how to look. I'm telling you to look at the market horizontally. Take that box and look and see how long the market stays in it. That's telling you a lot about the current environment that you're in. See? Small candles, that tells you a lot. Big candles, that tells you a lot too. Understanding what big candles mean in a small candle environment. Understanding what small candles mean in the big candle environment. So you kind of see how there's a lot that you're learning just through observation. And it's so crazy because people just, I don't know, for whatever reason, they don't want to take the time and commit the time to learn. You're going to have to learn if you want to win like this. If you want profitable the way that we are here on NADEX and the way that we're positioned to be, you're going to have to learn. That's just it. That's it. There's nothing else. You're going to have to learn, because otherwise you'll just remain in the land where it's all about trade setups and probabilities and hope and faith and wishing. That's where you're going to be at. And if that's where you want to spend the bulk of your career and the bulk of your time at, then so be it. But that's not going to put you at the professional level at all. In order to be a professional, it means that you got to be consistent. How are you going to be consistent if you don't even know why you're in a trade? You don't know why a trade did what it did. You can't tell me nothing about, why. I'm asking you, well, why do you think the market did that? Oh, well, I don't know. Because the market is crazy. It just does whatever it wants to do. No. That's what it looks like to you when you don't know anything about the market. See, that's always the default answer by everyone who doesn't know anything. They always say, oh, the market's crazy. It's totally unpredictable. Guess what? We don't have to predict it. Whoa. To be profitable, you don't have to predict the market. You got to understand it. Bang, bang. You don't got to predict. Understand. Yep. By the way, if anyone here is new, if you have a question, please feel free to ask, especially if it's a question about the platform. If you got a question about training, anything like that, feel free to ask. Definitely, producing this content for many of the folks out there that want to use trading as a vehicle to achieve financial freedom. You could do it. And not only can you do it, you will do it if you learn the market the way that I'm telling you to. If you take the time and you learn about the market like I'm telling you to do, listen, man, financial freedom is on the horizon. Trust me. Yes, this is what it becomes, right? Instead of prediction, we just anticipate based on what the market's doing already. Bingo. Bingo. Yep. And that's a major distinction. Because, see, all right, put it like this. You anticipate what you know is coming. Hold on. Just think about that. You don't anticipate something that you don't know. You anticipate something that you know is happening, right? The anticipation is the excitement and the buildup to what you know is going to happen already. That's what we're doing versus predicting. Predicting is you trying to figure out what's going to happen. Like, well, I think this is going to happen. I think based on what I'm seeing here that this will happen. Nope. Nope. We've elevated beyond that. We're up at the point where we don't think anything. We see. We're looking. Observation. We're looking. We're seeing what the market is doing. So if we're seeing what the market is doing, then we know what the market is going to do. Wow. Crazy, right? Crazy. So because if you know what the market's going to do, how? How do you know that? Well, because the market's doing it already. I know that that's confusing for so many people. They still try to figure out what I'm talking about. They're like, what do you mean? I don't understand that. Just try it. Start looking at the market for yourself. Just try it. See, that's why we have tools. People, just like when you see this green box on the chart and you're looking at the box, you're like, wow, look at that. Look at the candles in the box. I give you an example. Look how long these candles been in this box for. Just an observation. Just an observation. Just look. Look how many candles are inside of this box. From back here where this big one is. So from 3:00. So for 19 minutes, 19 candles have been inside of the box. In the box. That's a lot of information, ain't it? 19 minutes. That's like 4 binaries. So you see how the tools work. The tools help you to see. And like I said, we see so we don't have to guess and we don't have to wonder and we don't have to predict. Powerful stuff, man. Powerful stuff. Mm-hmm. I don't think I got enough sleep. I feel tired still. Feel a little tired. We're nodding off. We're going to do some exams. Let's do some exams. So we got, what, 3 minutes left? All right, cool. So currently, you see this. You see how the market is moving down here towards the bottom of the box, and I'll give you a little more time. I'll give you a little bit more time. I'll get you to the end of this minute. All right. We got a whole 3 minutes left. I want you to tell me, do you believe that the market is going to stay inside of this box, or do you feel that the market is going to come down through the box? Type in your response. Is it going to stay in, or is it going to go out? So just type in or out. Type in or out. In or out. Let me see what y'all saying. I like how confident you sound. You sound real confident right now. Mo says it's going to stay. Maui Jeff, stay. Orion, stay. Carrie, stay. Get Money Greatness, stay. So the only one that says it's going to go out is Bilal. So Bilal, they left you out in the cold, man. Everybody left you out in the cold. All right, so Bilal says it's going to come back down. It's going to stay in the box, but we just I like to do this exercise. And this is good. Look, here we go. Pressure. Go ahead and test it. Go ahead and test that barrier. Mm-hmm. Bilal, how you feeling? Bilal's like, yeah, red candle. You like, yeah, red candle. All right, so we in the last minute. So everybody that said stay in, or you're staying with your decision, or you're changing? Or you're staying, or you're changing? I give you one chance to change. If you want to change, you can say I change. Go ahead. Yes, y'all. Are you sticking with it? Charles says it's gonna stay in. Oscar says stay in. Alfred stay. David, Jeff is staying. Everybody staying, huh? Everybody staying. 5 seconds left. 4, 3, 2, 1. The stage have it. All right. So Bilal, you had a little hope over here in this red candle, huh? All right, so let's talk about it. So tell me why it stayed in the box. Tell me why. And what I like the fact that it came down and retested the barrier again. I like that. It retested that barrier. Because it created a barrier here, and then it came back down and retested it here. And there's a buffer. Not a big one, but there's still a little buffer there at the same time. So you really didn't know until you got into the third candle, the one right before the last one. Because during the last one, that was the moment of truth right there. The market was going to decide to go through the strike, or it was going to decide to stay in the box. But tell me why you feel it stayed in the box. You checking your indicator? And I like this. Look at what Bilal says. Now, this is good. His reason for saying why it was going to go out. Ooh, this is good. This is good. You know why that's good, right? Because that's the only thing that would take it out the box. Did y'all hear what I just said? The only thing that could have taken it out the box was a position change. That was it. And what do you need in order to have a position change? You need what you didn't have here. All right, hold on, wait. Y'all tell me, because I don't want to just keep saying what everything is. What did you need that you didn't have here in order to have a position change? In order for the market to have moved out the box? What did you need but you didn't have? And I like what y'all are saying about why I stayed in the box. But yeah, so my question now is, what did you need that you didn't have to take it out the box? Let's see what y'all say to that.
Dom the Monko. Dom the Monko.
Whoa. Come on now. Come on now. Come on. Yep. Yeah, Mo was on it. Mo was on it. So, and the reason, so check it out. This is why. This is why. You don't have momentum in the market right now. Why not? We're not in that environment. We're not in that environment. We're not in the gray either. Uh-oh. We're not in the gray, are we? We in the green. Listen, we're in the green, meaning it's clear what the environment and behavior is right now. It's clear. So if you got clear environment and behavior, you know what won't happen. Oh boy. Oh boy. See, check this out. This is what would have happened if you did have momentum. Let me move this candle. If you had momentum, this candle would have been through the line. It would have went right below the box. It would have did it already. That red one. This one. This would have went through. But when I asked y'all about it, and I said, I'm gonna give y'all a chance to change your answer. That was during this one, because I wanted to see if y'all would change or y'all would stay with it. See, because you were looking at in real time what the market was doing. Here, you saw that there was no momentum. Momentum is what you would have needed for this to become a position change. And you didn't have it. Well, why didn't you have it? Because we in the green. It's clear what the current environment and behavior is. So if you don't have momentum to take it out, what the market gonna do? It's gonna do what it was already doing, ain't it? It's gonna stay in the box. Man. The more we do this, the more you'll get to see what I'm talking about is the truth. You'll see. Right. Right. Yeah, exactly. Pricing was almost out. Yep. And I do like what y'all said as far as why it stayed in the box. So Mo said because of the range. Definitely. David said the movement of the candles and the behavior was respecting the barrier. It's been in the box for a long period of time. That too. Carrie saying the same thing. Of respected the barrier. Very good. Very good. So, Bilal, does that make sense? What I just described about the momentum not being there, does that make sense to you? Where we at? Oh, let me come over here. All right, excellent. Excellent. Yeah, that was really good. That was a good exercise. That was really good. Yep. Really good. So when when you see that this behavior is present, like you see what it's doing now, this is how it tests the barrier. Exactly what it's doing now. It's retesting this barrier here. Let me just zoom in a little bit. There's a barrier here. You got a barrier and you got a buffer. The barrier here is around 5, 3, 5. Yeah, see that? That's where the barrier is at. And you got a buffer in between where the candles are and where the strike is. So when you see the retest, that's what the market's doing. It's testing the barriers, and when it holds, it's holding because the market has that respect for where that barrier is. And also because of the behavior. In other words, because of how the market's moving. Also because of what the market don't have in it. It don't have no momentum in it. It ain't nothing there to push it out the box. So instead of pushing it out the box, what the market does is remain in the box because there's no momentum and because it's respecting the barrier. Crazy, man. It's crazy. Here, see, this right now on a +1, this would be valid. And I know that you see here that there's no pricing, but on the +1, I would click into this. You see where it's at 3.5? At 3.6, I'll be clicking in. Just applying the process. And what happens is when you learn how to stick to the protocol, you just repeat, like there's a 6 right there. Boom, clicking it. And you get filled or you don't get filled, don't matter. What's more important is that you understand how you're doing this. You understand? You got to understand why. It's like, well, why would I just click into it? Well, because you understand what the market is doing throughout this entire process right here. See? So that was valid right there. That right there, if you got filled, 100% valid. But whether you got filled or not doesn't matter because that was the process that you applied. That was it. Just now, that was it. That's the process. So that's MRMH, whatever you want to call it. MRMH, that was RCB. You could have clicked in and been in the trade. If you got filled, then you would have been in the trade. Yep. Exactly. Muscle memory. Yep. Yep. 100%. Solid. Mo got no fill. So Mo clicked in. I know a bunch of y'all clicked in. I ain't even have to wonder. Yep. Excuse me. Yes, indeed. So, I mean, it's powerful stuff, man. It's powerful stuff. And it's what I'm saying. Like, we just here just observing. Like, it's not like we're looking for anything to happen. But you definitely want to know when it does happen what you should be doing. That's the process. So we just apply the protocol. Observation is part of the protocol. Execution of the process, that's part of the protocol. So without thinking, without hesitating, without wondering about anything, when everything lines up, boom. It's an automatic process. Yes, indeed. Automatic. But I think that what will help many of you understand things more is what I was explaining about the fact that you don't have momentum. See, that helps to put this into perspective. It's like, well, man, I wonder why I didn't do a position change. That's why. That's why you don't have momentum in the market at all. See? Now, a lot of times what will happen is the market it'll come into periods of time where it does this for a period of time and then momentum comes back in and you'll see a move, right? Majority of the time that does not happen in the last minute. So that'll happen at some point before you even get towards the end of the binary. That's the good thing about when momentum does come in. It's likely not to come in the last minute. It's very likely not to. Matter of fact, pretty much anytime I'm watching, it never comes in during the last minute. It always comes in before that or after it. So, and again, when it does come in and you see it, you understand what it is. It's like, okay, there's that position change right there. See? And then when the market repositions wherever it sets up, now you start observing again and you start to see the existing behavior come back, or the market will be in the gray area doing a bunch of other shit. So you already know what to anticipate happening. See, you kind of know what to expect. It's not that you're predicting that that's going to happen, but you already know to expect something to happen based on what it was doing already. And if it doesn't do that, then it's now in the gray area doing something else. And either way, we're fine with this because we know either way what is going on. Like we know exactly what's happening regardless. For you to be able to even say, yeah, it's in the gray area now. That's amazing. That's amazing. Yep. Carrie got no fill. Mm-hmm. Another thing too that you'll notice, many times the market inside the box will travel from the bottom to the top, top to the bottom, bottom to the top, top to the bottom. It'll just relocate to the top or bottom of the box without going outside the box. Ain't that crazy? That's kind of crazy, right? You'll see small candles, and then you'll see kind of a bigger candle. It won't be a big candle, but it'll just be bigger than the smaller ones. Those bigger candles come and they start to reposition the market inside the box. So it's like small position changes, but it's in the box still. It's moving the position from the bottom of the box to the top, or from the top of the box to the bottom, but it's staying inside the box the whole time. I never went into that in detail like that just now. So it's not that there's two different types of position changes. It's a position change regardless, but a position change can have momentum in it. If it has momentum, that's when you see it go outside the box. Man, I'm breaking it down for y'all today. Jeez. When there ain't no momentum, it stays in the box. It just goes to the other side of the box. I need to walk off, man. I need to walk off. I know you're caught what I just said. Look how much clarity comes. Look at all this clarity. Sheesh. Bingo. Momentum would already have to be in the market for it to show up at the end. It won't start at the end. Excellent way to say. Yep. I know, right? She's like, chill, don't walk off yet. Chill. Right. Right. The 305. Exactly. Very good, Mo. Yep. See, as soon as I said that just now, Mo went to one. Exactly. This regular right here. All it did was move the market activity from the top down to the bottom of the box. That was it. That's it. Then this one moved it from down here back up to the top. It's crazy. Crazy, man. In case you ever wondered, like, yeah, sometimes I see bigger candles in the box, bigger than the smaller ones. Right. But they're not big candles. They're not candles big enough to take the market out of the box. So the market still be in the box. I know that y'all have wondered about that. I know. You're like, yeah, well, yeah. I always got confused about that. Well, you just got clarity. Just got clarity. Yeah, this is good, man. This is a good way to end it. This is a good way to end it. So I'm gonna wrap it up, man. I'm gonna wrap it up. I want everyone to have an awesome Christmas. Oh yeah, it's my pleasure. It's my pleasure. Yeah, it is mad long. Send me that list. There's a lot of them. I'm curious to know, like, how many of them are like damn near full blown training. Gary said he got a lot. He got a file of the lives. Very good. Very good. Yep. All right. So listen, I want everybody to enjoy their Christmas, enjoy the festivities, time with your family, and all of that. I will be training and doing everything that I normally do throughout the holidays. So it's always going to be the same for us. Like nothing changes. And I'll be back on at some point next week when the market opens. I don't know if it's Sunday or Monday. If it opens Sunday night, I might. If I get the itch and it's open Sunday night, I might do a live observation that night. But I'll see. I'll see what goes on. All right. But in any case, everyone have a wonderful Christmas. And I will see y'all when I see y'all. All right, y'all. Y'all know what it is. Mark Fuller, TeamAlliance. So this is Coffee and Charts 61. Yep, 61. All right, y'all. Love, peace, and soul. Deuces.
Dom the Monko. Dom the Monko.